The spring market has finally hatched. Hey everybody, it's Alyson with Live South Denver, your real estate strategist and realtor for the South Denver area. All right, let's jump right into the numbers and let's talk about what's going on here in the Denver market. Buyers put 4,000 homes under contract in March. That's 13% less than they did a year ago, but that number is up 500 to 700 homes over where we were the previous month. There was a little recalculation of some of our stats for the previous month. That's why there's a range there. We saw 3,700 homes close in March. That is down 16% from the year before, but we're up 40% from where we were a month ago. 4,800 new homes hit the market in March. This is 16% fewer than where we were last year this time, but it's up 44% from the previous month, February. 13% of all of those new listings were over $1 million. 3 of those I sold. We ended March with the same number of homes available for sale, 3,800. But because there have been more buyers active, we have less inventory. We're just at 1.02 months of available inventory, leaving March and heading into April. The average days on market for March, 38 days. It's a 10-day drop from the month before. This is still up over last year, but only by 11 days. So we have certainly shrunk the gap from where we were in February. These numbers were much larger over last year and over the previous month. The median days on market dropped from 26 days to 11 days. So a major shift there as well. That 15-day change in 1 month marks a large shift in market activity and traction and buyer activity, all in a very short span of time. All right, on to those home prices, the stuff everybody wants to know about. The average closed price for all homes in March, $658,000. That is up $12,000 from the previous month. That's a change of 1.8%. However, from the previous year, we're down about 6%. The single family home price average is $736,000. That's up $15,000 from the month before. That's a 2% increase from that month, but it's still down 4% from last year. The condo and townhome average price is $472,000, up $7,000 from February. That's a 1.5% change from that month, but is still down nearly 5% from the previous year. Over to those median home prices now. The median sold price for all homes is at $565,000. That's up $11,000 from February. That's a 1.6% change from that month. However, from the year before, we're down 6%. $618,000 is the median price for single family homes. That's up $18,000 in just a month, giving us a 3% change in month over month, but year over year, we're down 6.4%. Median price for condos and townhomes is sitting at $407,000. That's up $7,000 and 1.6% from February, but still down 3% from the previous year. These month over month increases are showing up in our list price to sales price ratio as well, because for March, we're at 98% list price to sales price ratio. In February, we were 96.4, and in January, we were just 94%. So what are some of the takeaways? What are some of the things I'm seeing? In last month's market update, we were seeing month over month positive changes. We even were seeing our year over year changes not look like they were in the negative, and now they are. Well, why? Because last year at this time, the market skyrocketed. It exploded in February. And we were on a chase from February until the end of April. People could not consume homes fast enough. Well, now we are seeing year over year how we are probably going to be on some negative numbers for a little while, because the market was just so hot last year, all the way up until about Mother's Day weekend. It started to soften a little bit at the end of April, but really it was just strong, 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 go, go, go. And we won't have those May numbers until June. So that year over year data is probably not going to look awesome until we get later into the year this year. But don't be fooled. With our market having such low inventory and the buyer activity really heating up, particularly now, as I said in the beginning, the market is hatching. It really is. The snow is going away. The flowers are blooming. The end of the school year is near, and the buyers are coming out and chomping at the bit. We're seeing that with some of the different data that we've already talked about and some I'm getting ready to share with you. The market is really tightening up quite a bit. And rates are not fluctuating and swinging nearly as wide as they did from about May of last year through the end of last year. So the fact that rates are still higher than people like, they're also consistent, and consistency brings confidence. That confidence in the market has allowed for sellers to see the need for price drops to decrease on their homes. In fact, we've seen that from March 8th to April 8th, the percentage of homes that have needed a price drop to go under contract has decreased from 28% to 25%. And the percentage of that decrease has dropped from 5.3 to 4.3%. One of the other interesting things about this data, I talked about the major shrinkage in days on market, both in average and on median. Well, let's dig into that a little bit. The median days on market changed so much. And you might think, hey, the buyer pool is larger, it's stronger, there are more of them in that lower price point, right? Anything under maybe $750, particularly here in the Denver market, under $750 is more first-time home buyer range. Actually, the $500,000 to $700,000 range has longer median days on market than homes in the $2+ million range right now. $2 to $3 million homes, 10 median days on market. A $3 to $4 million home, 6 median days on market. The $500,000 to $700,000 range, 13 median days on market. All right, so why is that? First, let's talk about the $1 million homes. There is a much smaller pool of those, and they run the gamut from being older, needing a full gut job, maybe just being on some land or having a view. Some of those are really farther out from town, and some of those are really close in, and it's all about location. So we're looking at 80 homes on the market at one time that fill that pool, maybe 120. And we have buyers who, if we niche them down into what they're looking for, that may have 10 homes to choose from, right? If someone wants to be close to the city, they don't have 120 homes to choose from. They have 10 or 15. If we have someone who wants to be on land, acreage, they have 10 homes to choose from. So the buyer pool within that segment gets really niched down very quickly. So that's part of the short time on market. Now, the 500 to 700 range, we break that down into 5 and 600, then 6 and 700. Those are two distinct buyer pools. We're not usually crossing over. And what we know is that sellers are still having a hard time budging off what they think their home is worth. And buyers in this range have often had to come down a little bit, lower their expectations, because they either didn't get to buy when rates were lower, or they thought they could have a house that was ready, staged, clean, perfect, easy to move into. And that's hard to find, or it's ultra competitive. So it takes a little longer to get the house that you're okay with, willing to get, can win in a multiple offer situation, and to find one that a seller in this price point has cared for, maintained, done the annual maintenance for, that the backyard looks nice, that the inside isn't dirty. I'm not saying that about all sellers, but sometimes these houses just get thrown on the market. So it just takes a little more time. And I think that's really the story behind these two. Another key takeaway, the market is hyper local right now. There are parts of the market where homes are going under contract in 3 to 7 days. There are maybe multiple offers, and it was really all about the location, maybe a school, maybe the views in the area. Maybe homes in this area are getting flipped and they're easy move-in ready houses. That is still so desirable to buyers in this market. And then I am seeing areas where there is a flood of inventory and homes aren't moving. And what I would say is sellers in this area, they may or may not be watching, they really need to be aggressive about thinking through how they're positioning their home. I think in this area, agents and sellers have got a hive mind about comparing their house and its pricing to others. And if there is a flood of inventory, it means that all of these homes have become overpriced. When they're sitting for 3 weeks on market and they're rejecting offers or not getting offers, clearly the buyers aren't biting. I have sellers and buyers active in all of these types of markets, and we are talking about this on a regular basis. The new build market is hyper-local as well. Are you planning to build from dirt? Are you planning to build a spec? Are you planning to go and get a quick move in that you want to get in the door in the next week, 30 days, 60 days? The way you're going to get a deal on that is going to vary by builder, by location, by how fast their inventory is moving. So there is a lot to know about this as well. So we've got a lot of different parts of the market right now, and they are all selling, moving at different paces. So you really need someone who understands all the nuances of that. Last, I still get a lot of questions about when inventory is going to increase. We are still going to see some more inventory coming on this year. It's just the normal pace of the market emerges. However, when we have stats like this from Black Knight that tell us half of all borrowers have a mortgage rate that's below 3.5%, and that at least 2/3 of all borrowers have a rate below 4, I just do not think we are going to see a load of inventory emerging into the market until we see interest rates overall get closer into the mid 5s. Rates are above 6 right now. To jump over 2 points on your mortgage rate to move for anything that is not strongly compelling is very hard for homeowners. It's not as hard for first-time buyers because we can have that conversation about paying your own mortgage, investing in your own place, and knowing you're going to refinance. It's very hard for someone who already owns a home to plan to increase what you're paying on interest if you don't have a strong, compelling reason to sell your home. So inventory is not going to have a large boom this year and expand massively. We're going to be looking out a year at least, I think, before the market really loosens up on inventory. So when I tell you, and you're hearing me say the market's really heating up, what's heating up is buyer activity in a tight inventory market. If you want to chat more about buying, sellers, if you want to talk about selling and the dynamics in this hyperlocal market, please reach out. I always love to chat and dig in on the data, and I will see y'all next week.